Global investing, it can feel like you're trying to solve a puzzle in the middle of a hurricane, right? It is just so complex, so chaotic, and it's always changing. But what if you had a clear, repeatable process to cut right through all that noise? Well, today, we're going to pull back the curtain on one firm's structured approach to do exactly that. And that's really the million-dollar question, isn't it? Every single headline, every economic report, every political shift could mess with your portfolio. So how do you make decisions with any kind of confidence? How do you even begin to separate the signal from all that noise? Well, the firm we're looking at today tackles this chaos with a surprisingly simple mental model. They visualize their entire process as a Venn diagram. Seriously, just two overlapping circles. It's their powerful way to bring structure to a world of information and really focus their strategy. So let's break down how it works. All right, here's the game plan. We'll start with that big picture global view, then dive deep into the companies themselves. We'll look at where they overlap to find that special edge, how they build a position, and super important, how they know when it's time to sell. Okay, let's start with that first circle in our Venn diagram. Think of this as the 30,000-foot view, right? We're looking at the big picture. Before they even whisper the name of a single company, the whole process begins by understanding the massive forces that are shaping the entire global economy. And when I say big picture, I mean huge. We're talking about things like where the US dollar is headed, which affects pretty much everything, or what the political situation is like in a given country. The real question they're asking here is, which parts of the world have the wind at their back, and which ones are sailing straight into a storm? All right, so now let's jump over to that second circle in the diagram. We've got our big global context. Now we're going to zoom all the way in. It's time to put individual companies under the microscope one by one. And this is the kind of stuff you'd expect, right? The classic homework. How strong is the business? Are the finances in good shape? Who's the competition? But you'll notice those big picture things we just talked about, like tariffs or sanctions, they're already part of the conversation here. And believe me, it gets even more interesting than that. And this is so crucial in global investing. A company's balance sheet can look perfect, but the real question is, who's really in charge? You have to understand the hidden power structures. Are we talking about oligarchs? These massive family-run conglomerates in South Korea called chaebols? Or is the military involved? Knowing this can literally be the difference between a great investment and a total catastrophe, especially when things get rocky. Okay, so we've got our two circles. One is the huge top-down global view. The other is the super detailed bottom-up company view. But the real magic, the secret sauce for this firm, it's not in one circle or the other. It's where they meet. It's right there in the middle, in that overlap. This is exactly what they mean when they talk about alpha. That's just fancy talk for the potential to beat the market. See, it's not enough to just find a good company. It's about finding a great company that's also in the perfect spot to ride those big global waves we identified earlier. It really shows you that for them, you just can't have one without the other. They have to work together. So, let's say an idea makes the cut. It's sitting right there in that sweet spot where the big picture and the small details line up perfectly. So, what happens next? How does a good idea turn into an actual investment in the portfolio? Well, let's take a look at how they build it out. It really boils down to two things, conviction and risk. And they measure it in what's called basis points. Don't worry, it's just 0.1%. A pretty standard idea, that gets a small slice of the portfolio. But an idea they are really confident in, one that just nails every single part of their process, that gets a much bigger piece of the pie. So you see, risk management is built right into the size of the investment itself. And check this out. This number here tells you everything you need to know. They have a hard limit. They will not put more than 500 basis points or 5% into any single investment. But here's the kicker. They've never once hit that limit. Not once. That says so much about their discipline, right? They're never so overconfident in one single idea that they're willing to bet the farm on it. Now we get to what might be the single most important and most ignored part of any investment strategy. It's not about what you buy, it's about when you sell. And it's all about having a clear, unemotional plan for when to walk away, decided before you even get in. And look at how this perfectly mirrors how they decide to buy. The reasons to sell are tied directly to their original research. Has the price gotten too high? Time to sell. Has the political risk in the country shot up? You sell. Has the company's own health started to decline? You sell. It's a system. It's designed to take emotion completely out of the equation, to stop you from doing things like holding a loser too long or falling in love with a winner.
So, what's the big takeaway here? It's that by starting with a simple idea, that Venn diagram, this firm has built a full blown system. It's a repeatable process. It takes all the chaos of the global markets, runs it through their top down, bottom up filter, finds the right opportunities, sizes the bets correctly, and gets out with discipline every single time.
And that kind of leaves us with one last thing to chew on. We all love the story of the one brilliant idea, right? That single stock pick that makes a fortune. But maybe, just maybe, the real key to success over the long run isn't about finding that one great idea. Maybe it's about building a great process that you can rely on day in and day out.